10 investment tips for beginners. If you are considering investing your money, it is likely that you aren't sure how to begin. The amount of information relating to investments on the internet and print media is abundant. Truth be told, all of it may seem complicated or intimidating at first. But the following tips will help you get started on your investment journey. Remember, always consult a wealth coach before investing in any asset. 10 investment tips for beginners. 1. Set a goal. It is important to have a goal in mind when investing in any asset. The time frame you pick should line up with your monetary objectives so that assets are accessible not long before the desired event. 2. Manage risks. As a beginner, it's important to remember that you should analyze your risk profile. Various factors such as your age, financial situation, and more determine the kind of investments you should add to your portfolio. You can take the simple risk quiz on the FinTech Wealth app to know more about your risk profile. 3. Invest early. The earlier you start investing, the greater your potential returns could be. The sooner you begin, the quicker your money will start to compound and you'll need less money to reach your financial goals. So the best time to start is today. 4. Work with a trusted advisor. As an investor, it is advisable to always invest with solid advice from experts. Advisors gives you access to analyze the market and several other factors to give you hand-picked recommendations. This can help you save time and grow your wealth for the future. 5. Diversify. The market is unpredictable. To avoid losing a lot of your earnings when the market goes down, you should create a diversified portfolio. You can do so by investing in international markets in case the local market begins to perform poorly. But it's important to speak to a wealth coach to understand and strike the right diversification balance. 6. Pay for quality. It is not advisable to buy or sell a stock just because it has a low price point. Higher-priced stocks from quality companies are historically known to deliver returns over the long term. Therefore, it is important to invest in quality assets based on research and data. 7. Be patient. If one of your investments is performing poorly, it doesn't necessarily mean that it won't turn around. The market is unpredictable. Get personalized advice on when to exit an investment from trusted wealth advisors. 8. Stay informed. It is always a good idea to be aware of how the market is performing. Research on the stocks or funds you plan on investing and find reputable resources to keep up with market trends. If you're a busy professional, this can be difficult. 9. Save for retirement. It's never too early to start thinking about your retirement. Retirement accounts have numerous tax advantages. By starting to save for retirement early, you'll have to save less over the years. 10. Speak to a wealth coach. As a beginner, investing in funds can seem tricky at first and you could be unsure of the decisions you are making. By receiving professional advice from one of our trusted wealth coaches, this could help you